Morning, everyone. It's Wednesday, March the 26th, almost through March. Where does the time go? And today we have no news, but we do have news Thursday and Friday. I have been away from live streaming because I've been sick, so today is kind of my first day back to recording, and tomorrow I hope to be back live again. So today we'll have to do is I reiterate myself back onto the charts here, and yeah, look forward to live streaming tomorrow. So this will be the best that I can do today. So the market has just opened. It's 9:30. I've got ES on my left and NQ here as my main screen. Just gonna drop down to the 1 minute. I've set my chart up earlier this morning. We have an opening range gap that is in a discount position, meaning that price opened up below the org. So just see how price reacts this morning. It's 9:30. Move my 9:30 vertical line over slightly so I can see the first candle. I'll be right back. Sorry about that. My espresso was ready. I can't start the charts without having an espresso this morning. Decaf as always. All right, so here's our 9:30 opening candle. So this is our low range right here. 2, 3. Overall, I'm bullish today on the higher time frame. We are on the buy side of the market. I'll show that to you a little bit later, what I mean by that. We've been bullish the last 2 days, and today I do anticipate a bullish day, although price may want to go lower before it goes higher. So just keeping an eye on that. There's our first 9:30 candle. 1, 2, 2, 3, 4. This down. This blue area here is the volume imbalance that we've already filled, but I like to keep it on my chart because at the end of the week, I'm able to see the full picture of how price responded to the market. Got a new day opening gap down here, just below price. And this is the last of the 5-minute candles forming here for the break and retest strategy that I follow by Scarface, which is my morning strategy, or at least I look for a trade. Also anticipating the first fair value gap of the day. We might get one here when this candle finishes forming. Just quickly drop a fib onto the opening range gap. ICT. One of ICT's strategy is that the opening range gap will fill to the 50% level between 9:30 and 10 o'clock, and there will be a 70% chance of that happening. So we'll just keep an eye on it. I don't use that trade as a standalone, but I do use it as a confluence. It's one of my confluences. As you know, my name's Louisa. I live in Canada, and the weather here is starting to get a little bit nicer. I pumped up my tires on my e-scooter yesterday. Your price is really moving up in anticipation of hopefully some nice weather to be out on my e-scooter in the next, I don't know, 2 to 3 weeks, hopefully. Let's see what price is doing. It's moved up here just above the 25% of our opening range gap. Just taking out this low here. I'm on the 1 minute on both the ES and the NQ. This daily volume balance in the blue down here, it filled yesterday, so I'm not, I'm keeping it on my chart. At the end of the week, it kind of tells me a story of what happened for the week, so I'm leaving it on my week for now, but it doesn't have as great a footprint as it did the last 2 days. Throughout Asia and London, price has been straddling the midnight horizontal line. I find that interesting. It's been mostly below midnight, but it has been straddling it. So anticipate a move above midnight. But again, that is a factor or a confluence that I use in relation in conjunction with other confluences to determine where price might want to be drawn to or go to. I'm going to quickly just take a look at the 5-minute chart, see where we are. Break of structure. Taking out this low, the 5-minute. Anticipating a push up. This is my low, this is my high here. This is my 5-minute break of structure up here. My 5-minute break of structure is over here. Price is pushed above the 5-minute high candle. Let's see when the next candle opens. Oh, that's quite a violent push down. Just going to put in up here my 5-minute break of structure. the upside. A new day opening gap up here that could be definitely a draw on liquidity. Got buy side marked up here. Yeah, there's my 5-minute break of structure. And here is my 5-minute break of structure to the downside. This 5-minute candle low. This is not a buy signal or I'm not buying down here. I'm just simply placing this on my chart in anticipation of a potential trade. It's 940. Price broke above, came back down, tried to break above, but seller stepped in again. So this is not a clear signal on the break and retest, so I'm just going to continue to wait. In fact, I'm going to take that off for now. When in doubt, wait. That's my message for today. When in doubt, wait, be patient. If you're not entirely clear where the market is moving, then just wait for clear indication, more PD arrays. So we did hit the 50% mark of the opening range gap this morning. Albeit we wicked it, we didn't break it with a body, but we did wick it. Okay, let's take a look at our first presenting fair value gap right here. This now becomes my break of structure to the upside on the 5-minute because this is our most recent high. Up close candle followed by down close candle. This one is 43 seconds still to finish. And this is my 5-minute candle low down here, as well as my break of structure to the downside on the 5-minute time frame. Sorry there, Pi. Price moving in and out of the first presented fair value gap. Time is 9:46, 4 minutes off from our 9:50 macro. We may get a breaker block. High, low, higher, high, lower, low. When I see breaker blocks with a break above and a break below with a wick, I prefer to see a body closure. We do have a fair value gap within this breaker. Again, it's on the 1 minute, so something to consider. Price breaking below the 5-minute low candle, which is also my 5-minute break structure. I want to see price come down and move back with to retest this level and then break below with strength. That's what I would be ideally looking for. So we've broken below a 5-minute break of structure, waiting for this candle to close. 33 seconds more to close. Could be drawing liquidity here, new day opening gap. Just gonna move this out of the way. I want to see price retrace back into here, either equilibrium. We have a bearish breaker. We have a break below the 5-minute break of structure. Draw liquidity. Yet I'm not selling down here. I would need to see price come back into the range. Sometimes patience will reward us. Price will come back into the range, but not always. And if price doesn't come back into the range and it doesn't give us a discount price, then it's just a no, it's a no-fly zone, so to speak. See if price comes back. If we put on our GAN box here from the top to the bottom, we can see that equilibrium is here. This is equilibrium. So this is kind of a fair idea of where I would want to see price come, at least come back to for fair price. Spilled some coffee. My dog is under my desk, licking it up. So push down. We have this opening range gap, which was a huge opening range gap from Monday. This orange gap here, big opening range gap from Monday. Again, I want to see price pull back somewhere into this area here to give me an entry. can even pull a fib from the low to the high. Just give us our optimal trade entry target. Backwards from our high to our low. $62 to 79%. Our optimal trade entry. If price were to pull back, that would be a nice discount area for price to pull back too. So we'll just leave that on our chart. That would coincide nicely with our first fair value gap. Well, price is strongly pushing down. I know it's tempting just to jump in on that the sell side, but patience. Too often you can jump in on these things and then they immediately turn around on you. So I would like to see like a discount entry point, and I may not get it. Price could just run without me. Sometimes that's just the way it goes. So new day opening gap from March 24th, that has now been filled. Price continues to drop lower. Opening range gap from Monday, big opening range gap with new day opening gap down here in the last 25% of this opening range gap. Again, there's no point for me to jump in where price is dropping. I need an entry point that makes sense. I need price to pull back to an area that makes sense. Because if you just jump in now, price could easily pull back on a retracement. So let's just drop this scan box. So here was our breaker. Here was our bearish breaker. So high, low, higher, high, lower, low. Price does like to revisit a breaker and then drop. So again, I'm just being patient here, seeing if price will come back into the bearish breaker or return to the first fair value gap. It may not. I have my window slightly ajar, my sliding glass door slightly ajar. I think you can hear the birds. To me, it's like the greatest sound in the world because it's the sound of spring. Canadian geese have been flying back into Canada over the past 7 to 10 days, which has been so awesome to see. It's literally the first sign of spring. We had some snow the last couple of days. It doesn't last very long, but still, we do have fresh snow laying path in Canada. Pull back in here. Here on my chart, I have previous day low. So price is just above yesterday's low. It's an interesting point of interest to watch. See what price wants to do. Here's our 50% of this range, this morning's range. Here's our 50% and our OTE. We'll just readjust this 62 to 79%, which would be a nice pullback into. Doesn't have to happen, but would be nice. Watching here to see if potentially this might be where price reaches its low for the day, or it could just be providing a short respite, a short retracement. Price tapping back into the new day opening gap and immediately rejecting. So it's 10:03. We're in the kill zone. Sounds a little aggressive, kill zone. But the price has tapped back in twice into the new day opening gap and rejected 2 times, indicating weakness in price and potentially desire to continue moving down. We might get a retrace, some sort of retracement. We have long wicks indicating that sellers continue to step in. Today is Wednesday, March 26th, but on Saturday, March 23rd, ICT dropped a great video. It's a longer video than we've seen for a while, but he dropped some great information. If you haven't seen that video yet, I highly recommend it. Uh, a good portion of his video on Saturday discusses time frames. So all the different kill zones, what we should be looking for in those kill zones, the macros. Um, he says that in that video that is the most he will discuss, and is the most, I guess, nutrient dense information on time. And we know that with ICT, his whole premise is time and price. So time coming first. So if you haven't checked out that video, it's a great video to check out, make some notes, make sure you've got your kill zones correct, your macros correct for each time. One of the things that he discusses in that video also is taking your fib and measuring the opening range, not the opening range gap, but the opening range, which is from 9:30 to 10 a.m. So if you measure the opening range with your fib, and so let's just do that now here, and then taking a look at the standard deviation in terms of where price could go. So here's the price between 9:30 and 10, and here is our -1 standard deviation. So let's just drop that onto the chart in terms of like interest this morning, right here. We'll just label this ICT standard deviation from the opening range. And opening range is 9:30 to 10 a.m. Eastern Standard Time, of course. Just out of interest, it can go lower than -1 standard deviation. It could go 1.5 even to 2, and 2 would take us right down into the new day opening gap. So here we can see price ranging, catching its breath a little bit. ICT also says that when price is moving strongly in a certain direction and it ranges, that once it continues, it will continue in the same direction. Meaning this morning down. Previous day low Tuesday being an impactful point of interest. See if price wants to break below previous day low, or if buyers are going to step in. If price is going to explore south of this range, I'd really like to see a draw back into the range, possibly to OTE or the bearish breaker before exploring lower. Does not have to happen, but boy, that would give everyone an opportunity to participate in the trade. Just gotta shut this window. I think everybody is outside today working on their homes. Well, we have construction happening, so we might just have to bear with that noise. I apologize, but spring, everybody is focused on upgrades and whatnot. Some price accumulating here. I'm gonna turn that off for a bit. Sorry, guys. Watching here, previous day low from yesterday. Here's the low from yesterday. Seeing how price is responding, reacting to that important level. Haven't made another fair value gap, so we have small candles, consolidation, or accumulation. While price determines whether the buyers are going to step in or the sellers will continue to be in control. Flipping back to my 5-minute time frame, just going to be tracking the lows on the 5-minute time frame. Here is my most current low, so black candle down, green candle up. That gives me my most recent low. And my most recent high is green candle up, black candle down. So right here is my 5-minute break of structure to the upside. So, oops. And price continues to drop lower, marginally, still respecting the previous day low. So price rejecting off the previous day low. Again, we'll just continue to watch. Price may absolutely, dump past here, retest and continue lower, but just watching at this point. We have not had really an opportunity, a retracement of price to an area that would make sense to try to jump into this trade. So continue to just wait and watch. I am curious to see this -1 standard deviation taken from, oh, here we have a, oh, no, we had an SMT there for a second. Okay, so price dropping below previous day low. No fair value gaps in this area. So the candles are small, price is a little bit weak. Price breaking below previous day low. Just kissing the opening range gap from Monday. Sounds of construction. What can I do? Looking at this area here, this is our -1 standard deviation of price between 9:30 and 10 a.m. This is an interesting area. I really wish there would be a pullback, a retracement, but so far there's nothing. I mean, here was the potential, but price had already dropped to this much. You know, am I really going to jump into a trade where price has already moved this much? No. Am I disappointed? Yes. Do I feel like I'm missing out? Yes. I'm human. What time is 10:24? Here's our optimal trade entry area. So from the high of here to current, this would be a discounted area for price to retrace back into before moving lower. And it may not give any of us an opportunity to jump into this trade. But you know, the mistake here is letting FOMO get the worst of you, right? Fear of missing out and jumping in now, and you know, then price pulls a retracement. Price tapping into the SIBI. Ideally with a bearish breaker uh, price inverting from this first fair value gap. And what's the other confluence? Oh, and the 5-minute break of structure to the downside. These were three confluences that that definitely indicated the price would drop lower. Note to self next time, Louisa. Can't be a perfect trader. You're not going to grab every single trade. But these are things that I journal. You know, I take a screenshot, I journal, and I think to myself, okay, next time I see these three confluences, that will be the time to take a trade to the downside. Price tapping back into the SIBI here. I'm going to be putting this on my chart going forward after watching ICT's March 23rd video. I am going to be putting this on my chart. So this is price movement between 9:30 and 10 a.m., which is opening range, which is different than opening range gap. 9:30 to 10 o'clock is the opening range. And I'm going to be putting the standard deviation on my chart every day, and I'm going to be watching that to just see uh, its potential accuracy, probability, you know, whatever analytical term uh, you want to use to describe it. ICT also talks about using the standard deviation for the afternoon session as well. So again, if you haven't seen that video, check it out, March 23rd. Actually, I think I'll drop a link into the description just in case you can't find it or you're not sure uh, which video it is. I'll make it easy for you. So I'll drop it into the description once this video has been completed. So we see price pushing up slightly. See, this is what I mean is, you know, jumping in on a price drop that's already dropped this much. It's not something I'm going to do. I'm going to wait for price to pull back into an area, into a discount area that would make sense, and then look for a potential continuation to the downside. So I'm going to leave my breaker up here because often price will return to a breaker before pulling back into a breaker before resuming. So I'm going to pull that across, keep that on my chart for the day. May not happen until this afternoon. It may not happen at all, but it's certainly an area that I will be watching. Just thinking about Scarface, I think it was this week or last week, he posted something that was pretty meaningful. He posted, if you enter a trade that is not part of your strategy, if you enter the trade based on fear of missing out, or without your strategy coming to you. And let's say that trade is profitable. The market will not let you keep those profits. The market is going to take those profits away from you because it wasn't part of your strategy. You're flexing a muscle that won't serve you in the future. And until you can become a patient, disciplined trader, it's going to be difficult to reach profitability. And I think this is something that all traders have to master, not just once, but it's an ongoing muscle that we need to flex, is this patience. And it's hard, it doesn't come easily to me. I'm sure it doesn't come easy to a lot of other traders. And these are some of the thoughts that I have, when I look at this and I think, oh gosh, I really missed out on this great trade this morning. But at the end of the day, I want to be true to what my strategies are, how I enter a trade, how I manage a trade. And those are the things that I'm proud of each day when I stick to those principles. And often when I disregard those principles and I act in an impetuous, undisciplined way, that's often when I will have a loss rather than a profit for the day. So as I watch price dropped and me not participating in it, these are some of the thoughts that I have. And Scarface is a trader that I follow. I think he's one of my mentors, and he's right. If you just jump into a trade and do something that's not part of your strategy, the market will take those returns back, as happened to me more than once. I'm sure. But drop in the comments if it's happened to you as well. You think to yourself, oh, that was a great trade. I made X. But at the end of the day, did you? Did you really? Or was it just more luck, or you being in the right place at the right time, pushing the right buttons? I want to be known as an intentional trader. I want my trades to be intentional, with thought, with strategy, and I continue to strive towards that intentional, intentional trading. If anyone were to ask me, what is my goal, that is my goal, to be an intentional trader, to be as intentional as possible. That's my philosophical chat for this morning. So here we are. Price has pulled back to previous day low. Let's see if it retests. See if it drops from here. Time is 10:33. See if it rejects, or if it continues to break above. If it rejects, I might jump in. Maybe. I have to have a strong rejection. I want to see the candle close. Okay, let's just take this. No, no break and retest for me today. Maybe I should have put my stop loss a little further up, but that's the way it goes. price is showing strength. So again, we probably got in with a little bit of a profit there, a loss on the first trade and a small profit on the second trade. Anyway, it's nothing to write home about. Nothing nothing exciting. And that's what happens when you have this long run down and you try to squeeze the lemon down here. So anyway, it's 10:51 and that's it for my morning. I'm trying very hard to just have a 2 trade max for the day and I'm done. And tomorrow's another day. So thanks for joining me and hope you guys got some value out of this tape reading today. Okay, take care. Bye for now.